So guys, we have officially jumped into June, which means that it's time for another dividend portfolio update. And I am so excited to share that we are closer than we've ever been before to that elusive $100,000 mark. In this video, my friends, I'm going to show you everything, like my best and worst performing stocks for the month, all of my recent moves in the portfolio, and we'll discuss what my upcoming plans are here in June. Now, before we get into any of that, I want to hear from you. Leave me a comment below and let me know what's been going on in your portfolio this last month. Were you up? Were you down? Did you hit any crazy milestones in your portfolio? Anything cool that happened to you guys in this last month? I want to hear all about it in the comments below. Anyway, getting into how my portfolio performed this last month over here on my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download this spreadsheet in the description of the video. And right now we're just starting with my main taxable brokerage account over on Charles Schwab, which as we can see is currently valued at $79,189. This is an all-time high market value, and every single year this portfolio is generating $2,943 in dividends. But going back to the account's current value for just a moment, this number right here, guys, is about a $2,300 gain compared to this time last month. So May was pretty good to me. And I will say this was a nice change of pace compared to these last couple of months, which as you guys remember, pretty much brought nothing but pain. Looking at the breakdown of my returns over here on Snowball Analytics, which is another really cool portfolio tracker that I think you guys would like a lot. And if you're not a spreadsheet person, or if you're just looking for something with more bells and whistles than your standard spreadsheet, this is the one to use. And the cool thing is you can actually try it out for free. In the description of the video, there's a link to try out Snowball Analytics. Like I said, I think you guys would really like this platform, so definitely check it out. But overall for the month, guys, it looks like I gained about 2.8% in the taxable account, which like I said, was quite the change of pace compared to the prior 2 months. In March, I was down 3.6%. In April, I was down even more, down 5.1%, which was the biggest drop my account has seen in a long time. But nonetheless, we were back in the green in May. Looks like we're up a little bit here in June, but we'll save that one for next month's video. But getting back to May right here, guys, of this 2.8%, or in dollars, that's $2,124. $1,800, almost $1,900 of that came from share price appreciation. And then we received another $240 in dividends. Pretty solid month of dividends for me. And with that, guys, if we scroll up just a little bit and compare my portfolio's returns to those of the S&P 500, the NASDAQ, and SCHD, it looks like my portfolio underperformed both the S&P 500 and the NASDAQ in the month of May. S&P beat me by 2.2%, nothing too crazy there, but the NASDAQ definitely gave me a beating and beat me by 4.4% or so. The NASDAQ had a really killer month, but we did beat SCHD by just a little bit. We outperformed it by 1.4% in May. And then with that, this is what things are looking like so far in 2025. I am just barely trailing the S&P by less than 0.2%. We're really hanging in there, which I'm pretty happy with considering how aggressively the S&P came back really in the month of May, and even a little bit before then. The S&P has come back with a vengeance, and so has the NASDAQ. And I'm not trailing the NASDAQ by that much either, by about 1.6% so far for the year. I'll take that. And we're definitely crushing SCHD. I'm beating it by 5.4%. And then zooming out once more over the last 365 days from the end of May 2024 to the end of May this year, I am actually outperforming the S&P 500 right here. I'm beating it by about 1.75%, still losing compared to the NASDAQ, but we're hanging in there pretty good. I'm only trailing it by 0.9%, and we are putting a beating on SCHD, definitely putting it in the hurt locker. We are crushing it by about 11% over the last year. So overall, guys, I really can't complain. And as I'm sure you can imagine, there were quite a handful of stocks in my portfolio that saw some pretty tremendous gains in this last month. So getting into my best and worst performing stocks for the month, starting with my best performer, by and large, this was Zoetis, which was actually the most recent addition to my portfolio. I think I started my Zoetis position sometime like towards the end of April. So now I've owned it for, about a month and some change. But in the last month, this one did really well for me. What a great way to kick off this new position. Zoetis was up 12.5%. And if we look at the year-to-date performance, that's going to leave the company up 3.9%, almost 4% here. And real quick, taking a look at my Zoetis position, this is where it's sitting right now. I have 29.1 shares at an average cost of $152.70. So right now, the current share price is sitting just below $170 per share, which is going to leave me up 10.65%. And then, guys, the other notable performer in my portfolio this last month was Visa, who saw a pretty solid gain up about 5.7% just in the last 30 days. And if we look at the year-to-date performance, Visa is on fire. The stock is up 17.25% just for the year. I'll definitely take that. And if we zoom out once more over the last 365 days, it's doing pretty much double that performance. It's up 35%. So Visa just can't be stopped. And on that note, this is what my Visa position is looking like right now. I have 23.74 shares at an average cost of $269.36. So right now the current share price is about $100 above that, which is going to leave me up about 36.6% just looking at the share price gains, or almost 38% including dividends. Either way, looking really good. So both of those companies, Zoetis and Visa, did really stinking well for me this last month. But with that said, on the other hand, in terms of poor performing stocks, I've got to be honest, guys, there's really not too much to report here. The only stock that saw any notable drawdown this last month was AbbVie, and it really wasn't too bad. In the last 30 days, the stock was only down 2.4%. So definitely nothing crazy there. And if we look at the year-to-date performance, AbbVie's still in the green. It's still up 4.35%. So yeah, once again, guys, overall, a very solid month of performance, and we'll see what the month of June brings. But if it's anything like this last month, then there's a pretty good chance we could hit that 100K mark. But I'm going to knock on wood for that one. We'll see what happens. All right, guys, now getting into all of my buys for the month, this might just be my most simple and straightforward month of buying ever. I only bought one stock in the taxable account, and I only ended up contributing to one fund in the Roth IRA. We have Zoetis. In the month of May, I picked up about 4.5 shares at an average cost of $161.34, which was definitely a bit pricier than last month, where we were buying Zoetis in the high 140s, low 150s. So it's definitely seen a run up, as we saw, a little bit earlier in the video. So that's what happened in the taxable. But then in the Roth IRA, like I said, I only added to SCHD. No VOO picked up in May. So I ended up buying about 20 shares of SCHD at an average cost of $26.17. And if we take a look at my position, I am like right there at 400 shares, guys. 399.84. But let's round up. Who are we kidding? And my goal with SCHD, as I'm sure some of you guys will remember, is by the end of the year, I want to hit 450 shares of this ETF. And I might have to adjust this goal upward to about 500 shares, because I think we started off 2025 at around 300 shares. So we've already added, 100 shares so far, and we're not even halfway through the year, which tells me I think it's possible that we could potentially hit 500 shares by the end of 2025. And with that, guys, now moving on and taking a closer look here at my Roth IRA. This is currently sitting at $17,679, so another all-time high in this account. And every single year, this account is now bringing in over $500 of dividend income. We just hit this milestone in the last month, so that's really cool to see. And looking at the performance, the Roth IRA had really strong performance this last month. It actually outperformed my taxable account, and in the month of May was up 3.25%, so it beat out the taxable by just a little bit there. But with that, if we take a look at the year-to-date performance, the Roth is still in the red just a little bit. It's still down 0.6%, so we still have a little bit of ground to make up here. Nonetheless, guys, if we take my main taxable brokerage account, which is valued at $79,189 and is bringing in $2,943 of dividend income every year, and add that to this $17,679 Roth IRA that's generating $507 in dividends, that's going to bring my combined portfolio value to $96,868 in my annual dividend income to $3,450, which if we compare that to my projected annual income from this time last month, we only added $30 to this number in the month of May, which really isn't a big jump at all. It's definitely lower than some of the other months we've seen. And that's pretty easy to explain. This is primarily because I was only buying Zoetis this last month, which is a very low yielding dividend stock. It only has like a 1.2% starting yield or something like that. So that's definitely not going to move the needle that much. But then looking at my gain in projected income so far this year, we started out 2025 with a projected annual income of $3,064, which means with the $30 that we added in May, we've added $386 so far in 2025. And guys, with my projected annual income now sitting at $3,450, that means we are only $150 away from reaching my annual goal of $3,600 in projected income by the end of the year. Now, I'd imagine the income gain that I'll see this month will be a lot like what we saw in the month of May. I'm really only planning on adding to Zoetis once again here in June. So I'd be surprised if we hit $3,500 by this time next month. But nonetheless, we are still very much on track to hit that $3,600 goal by the end of the year. And I still think it's possible, pretty possible, that we could see $3,700 by the end of the year. Now guys, as far as my watch list goes, I did add 2 companies to my watch list this last month. I added AOS and I added EOG to the list of companies that I want to keep an eye on. I think these are both very solid looking companies, and I'm actually telling you about both of them in this next video right over here. In this one, I'm breaking down why both of these companies made my list of top dividend stocks to buy in June, and along with those 2, I'm also telling you about a third very killer dividend stock, and all of these I think look like really solid buys right now. So click right over here to check those out, and I'll see you in the next one.